All right. Hey, everyone. Mark here. Mark P Markets. Thanks for joining me. I'm not simulcasting on TradingView today, so I should be able to answer more questions than usual. So I'll continue with that next week. Anyway, so if you're new to the stream, welcome, and thanks for joining me. Please put your question about your stock or your altcoin or whatever you want in the chat now. If it's an altcoin, please make sure to put USD after it so that I know I can get the right symbol on here. Okay, so other than that, let's get started. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, in these sessions, again, I like to talk about levels, price structure, and price action so that we can gather clues in terms of reward risk and probabilities for the coming week. Now, as the week unfolds, usually like on Thursday, I update these because the market can change and give us new clues to adjust for. Again, the idea here is to be a step ahead of the market and to form expectations before the market gets there. Now, I had some good questions in our investors, active investors chat about fear of missing out and a couple of things like that and some Bitcoin questions. So I definitely want to address those here. And thank you for the questions. Okay, so let's get started here. First thing I want to talk about is the economic calendar. All right, you should always check that first on a Monday. Whether you trade Bitcoin, stocks, Forex, it doesn't matter because there can be some important scheduled economic events that can lead to a range expansion. So you want to be prepared for the potential risk. That's why I stress that so much. So let's just see what we have this week. It looks like a slow week to me. So we're starting out here, in a couple of days, right? I think, Wednesday? We have Germany Harmonized Index of Consumer Prices. Okay, who cares? We have Consumer Price Index, ex food and energy for the US. Okay, whatever. Then we have, so those are CPI numbers. That usually is supposed to be an inflation gauge. Usually those numbers don't have much of an effect, okay? On the 12th, we have for the pound, GDP. Okay, I'm not going to worry too much about that. It's not a big market mover. On the 13th, Michigan Consumer Sentiment Index, not a big mover. On the 15th, we have for Japan, the GDP. And that's so like I said, very quiet week as far as scheduled economic news or economic information goes. So with that being said, it's also important to understand the environment that we're in. This is not a full volume decisive environment. This is like a holiday environment. And as this month unfolds, it's probably going to get worse as far as erratic price movement, highly random movement. Even if the market wants to work its way higher, right, and no sell-off, I put zero faith into this market at all because the major players that move markets are not present. All right, so usually the serious volume picks up in October. All right, it starts to grow as you get closer and closer to October. But usually October, November is when things are typically back to their usual weight. I mean, as in heavy. All right, so and that can be in either direction. The point is you can't take price action too seriously in this environment. Now, you're going to see a lot of nonsense on the major, television outlets and the shows and the fake gurus and all this other stuff. You're going to see a lot of talk, a lot of hype, and a lot of nonsense. There's something you need to know about the experts. And this has been going on in the Wall Street world forever. They like to coat everything that you see with some sort of layer of academic pretense, I like to call it, okay? Academic pretense. For years, they basically have this concept of, I know more than you about this, so I'm an authority, you need to listen to me. Meanwhile, markets are highly random. No one knows anything, especially if they're coming out on a public forum and sharing information. They know nothing. The people that do know something, which are typically insiders, all right, institutional investors or traders who can pay for high quality inside information, often illegal in the stock market, they know something. I don't see them sharing it. okay? Because that's an advantage. You don't share that type of information with the herd because then there'll be no one to take the other side of that trade. And when you're a large player and you're throwing around really large positions, you need a lot of people to take that off your hands. So they need to be blind to what they're doing, okay? They need to think that the market's going to go higher forever so that you can get out of your huge position near the top of the market. They know they're not going to get the top. They just need to get out to reduce their exposure. Someone needs to take it off their hands. Who's going to do that? A lot of unknowing Robinhood traders, right, who follow the news because they're stimulated to do that sort of stuff. That is the Wall Street mechanism. So you need to embrace that idea, first of all, and realize that no one knows anything. Because if they knew something and they were going to share quality information, for example, something like that gold situation that we're seeing right now, which we're going to talk about here in a moment, someone would have said, hey, I'm calling gold as a short, or gold is going pulling back, blah, blah, blah. No, you don't hear that. What do you hear about gold? Oh, gold's going to 5,000 because we have inflation and blah, 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 blah. Some irrelevant opinion that makes sense, especially if you think you know something. It makes sense. So what do you think? Oh, I should be buying gold. I should be buying gold. Gold is not in the good position right now, okay? And it's reacting to the stronger dollar. So we're going to talk about that in a moment. Anyway, let me say hello to a few people. We have Tillin. Hey, Tillin, good to see you. Alex, all right, cool. Hey, Shashank, good to see you. Go forth and multiply. All right, Erhan, okay, and Chris, good to see everyone. Again, I appreciate you spending some time with me here today. So let's get into Bitcoin first, all right, before I go into my rants on how markets work. And let's first talk about this Bitcoin situation because it's got a lot of people feeling uncomfortable, right? I see here in the chat, Tillin says, fully exited the market at 55K, tried to be smart and waited for an entry around 25K. Now he's sad because, you know, he missed this move. Okay, let's talk about that and all that because that again has to do with fear of missing out, and that also relates to the question that I had in the chat room about fear of missing out and being driven by fear. Now, first of all, this Bitcoin situation is the following. We had the higher low at 37K. I talked about this a few times, the possibility of it. All right, there was an early buy signal. We didn't call that because we just, whatever, things get in the way, you don't see it or you don't see it on time. But the signal was eventually called around 40K or 41K or whatever, right? So now this thing is doing well. It happened to work out. It was an aggressive call, but now it's, you know, fooling around 46K. Okay, fine. But here's the thing. Don't focus on this nonsense. This is where it is now. If you've missed it, you've missed it. This is what lures in, you know, people who don't know any better. No, it looks good now. It looks strong now. Where was everyone at 30K? We had a few swing trades called at 30K. I think one may have stopped out, but that was our original swing trade area, 30K. It looks good now, but it did not look good at the time. In fact, I had people asking me, are you sure you want to be long around 30K? I mean, you know, this thing looks like it's going to go a lot lower. I had no question. I don't second guess. I know what I'm looking at. No one's going to get me to second guess because I know that no one knows anything. Okay? So I follow the charts and I follow the information on the charts. And more importantly, I look at the risk. And if the risk makes sense, I don't care what anyone says. If I'm willing to take the risk and it makes sense, then I can take the trade. Whether the trade works out or not has nothing to do with me. Okay? The outcome. So that happened to work out. Anyway, so the point is, look where we are now. 50K is the next resistance. And we're getting there. All right? It's almost there. 50K was an old support going back months and months. And here we go. We're going right up to that resistance. Now, this is the worst place you could be buying Bitcoin. So if you missed it, no problem. This is what you need to do. So to address the question about fear of missing out and what do you do in these situations is, first of all, isolate yourself from all the noise, okay? Stop watching TV, stop reading people's articles and all that other stuff. It's not going to help you. It's not going to give you any kind of extra insight or confidence or whatever. You have some sort of need for control or you know, whatever that word is, right? Because you're grasping for information because you don't know what to make of this, right? Or what to do now because you're being stimulated by fear. There are two fears. There's the fear of missing out and the fear of losing, right? Both of those fears are an emotional layer that we must all deal with. Now, when you get more experience, you learn to separate yourself from that layer. Here's the first way to do that, and that is you have to first embrace the idea that markets are highly random. All markets are highly random and most of the time offer no advantage. So by taking a blind bet, like someone mentioned in the chat, what if I just put some profits in, just throw it in blindly? Is that a bad idea? Well, that goes against the grain of looking at your conserving capital, right? That should be your priority at all times. Conserving capital, risk first. If you focus on risk, forget rewards. Rewards are random, but everyone focuses on the rewards because that's conventional wisdom. I'm in the stock market. I'm here to make money. Yeah, money. Right. But that's why no one makes money, because you're now connected to the outcome. You want to win. So when you're connected to that type of outcome, that we have this thing that's built into all of us. It's called, we like to avoid pain, right? We like to seek pleasure and avoid pain. That is built into our brain. So when you start focusing on money, or everything is about, I need to make money, I need to make money. Well, when you do that, you're now inviting the pain avoidance mechanism, because making money feels good and losing money is painful. Now you have that emotional layer to deal with, right? So now what happens is, if the market is forgiving, which it's been, right? Bitcoin's been forgiving these recent few days, but the stock market's been ridiculously forgiving for a long time. So when things go the wrong way, what do? Well, you like to avoid pain, so you go into hope mode. And it's been working, but that's a really poor strategy, because all that money that you make now, right, in the forgiving market that's paying you just because it's random, you're going to give that money right back, all right? Because there's no strategy behind your thought process. It's all based on fear of missing out and fear of losing. And that invites hope mode, and you cannot win, all right? So your profits are random and temporary. That's the thing. And that's what makes the market work for professionals, because of this erratic and emotional decision-making that most investors, retail traders and investors, that's mostly how they make decisions in the market. That's why markets are highly irrational. Okay, so to separate yourself from that, you must have rules. First of all, the rules don't have to be complicated. They need to be simple, and you must stick to the rules no matter what the market does. So in the cases of, I was waiting for 25K and I missed it, and now I feel bad. Well, you're going right back into the emotional mess there. If you weren't willing to take the risk at higher prices, well, hey, you're not losing. And that's the main thing. You're not losing. Yeah, you're missing out, but that's not the same as losing. Your bank account is not shrinking. Okay? There will be other opportunities. That's the other thing you have to realize. There always will be another opportunity. So, okay, I'm not on TradingView today. I'm not streaming on TradingView because I've had some technical problems with that, and I have to figure that out, because I set all that up and then no one watches me on there because the stream is not stable on there, and I'm not sure why. So I have to figure that out. That's why I'm not streaming on there today. So anyway, so hopefully they'll figure out that I'm here. All right. So again, back to these levels. All right. So the emotional rant aside for a moment, again, it comes back to focusing on structure, levels, support and resistance, and general context. Forget when you're away from a level, okay? Like let's cover this price right here. And let's just look at some of these prices as it started to go, okay? Something like this, right? Something like maybe in here where it's tricky, where it might break out, but it might not break out. When you're away from a level like that, like the support at this point was established at 37K, again, it had to get here before we can say, okay, high or low at 37K. We were talking about the high or low developing here and this and that, but it's not established until you got green candles closing above it. And the next candle was very tricky, by the way, because at one point it was taking out that first green candle, and then it reversed hard on everyone's face. Now, again, my point is this: when you're in those situations and price is not fitting any of these rules that will help you get better probabilities and better reward risk, which is all that matters in this game, then you shouldn't play. Okay, it doesn't matter. And if you're wrong, like let me give you an example of being wrong. I was anticipating 35K. Okay, now Tillin mentions 25K. I was actually anticipating 35K, right? An old resistance acting as a new support. But I knew, and I've mentioned this, if you look at my TradingView articles, I had talked about, and also in the chat room, a possibility of a higher low above 35K, okay? So in those situations, yeah, I was wrong about 35K. But I also have enough experience to adjust if I see a change, right, that the market's not playing by my rules. Okay, fine. So it's changing its tune. The next question I have to ask is, okay, look, fine. The market doesn't want to fit my criteria. No problem. But what is it doing? And is it giving me a reward risk that's acceptable? And at this situation, in this situation right here, once that green candle closed, that is where you're looking at the risk right there. And you're saying, what is the risk here? Am I willing to take it? And what is the potential reward? Well, we knew, if you go back and look at our analysis, we knew the risk is very easy to define. You just look at these lows, okay? And you're looking at what, 37.5, maybe 37 even, something like that. And the market closed at this time, at the green candle close. What was this green candle close here? 39.7, right? So you're looking at maybe 2.5, max 3,000 points of risk, okay? Which is reasonable for Bitcoin. Now, the potential reward in that situation, we knew that 41, 42K was very possible because that was the resistance. So if the higher low formed, likely you get a higher high. Now, that's when probability comes into play, right? So usually you get the higher high, not all the time, but it's more likely. So in that situation, at that point, that's when you can decide, is this worth me taking? Can I get at least 1-to-1 out of this? Yes or no? And do I like the probability of the general location? If you can answer yes to those questions, then it's acceptable, okay? You figured out your risk, and you have to respect the risk. If it goes to your stop, which in this case, depending on how tight that stop was, it may have stopped you out on the next candle because it actually went slightly lower. What's the low of this candle right here? 37.3. So if you put it at 37.5, you're tapped out, and then it does this to you. Okay, that's just part of the game. There's no way around that except you have to be willing to take more risk. Okay, so and now here we are. So now people that are wondering what to do here or any continuation patterns here, you have to look at the levels first. And like I said, 50K is the next major resistance. So right now we're fooling around, what, 46.3? I mean, 4,000 points away from 50K. Anything can happen between here and 50K, and there's going to be a lot of hype and a lot of talk and a lot of nonsense, you know, in this moving up into this area. I wouldn't go near it because the reward risk doesn't make sense for me. So what I want to see, right? People are asking, so when would you get into Bitcoin? What's the story with Bitcoin? Well, what's the support is the question, and that's what I wrote about in TradingView yesterday. What is the support? It's 41, 42K. The old range resistance is the new support. That's what I want to see. The current candle actually came close to it. It actually went there. What 42.8 was, so it wasn't exactly 42 or 41, but it touched the 42s. That's a tough trade to take on this time frame. That at this speed, when it turns around like that, there's no way I'm taking something like that. Okay, but you can see though that the location is has somewhat proved itself a bit. Buying activity occurred there. We can see the tail. Okay, fine. So at this point, all we can do now is look ahead. Forget what's behind us. Look ahead. So the level is still the same. 41, 42, old resistance, new support. So either we go there, and that's where I'm looking for a potential long, or I have nothing to do. Now, it's possible that you can get a continuation pattern along the way. Like Alex is asking here, what type of continuation pattern? Well, it's possible if you get an inside bar. Okay, those are typically trend continuation patterns, like an inside bar, maybe a red one, green one, doesn't matter the color, but often it's kind of like this previous candle here, except that's not exactly an inside bar. But you get like an inside bar and then the high is taken out. It's an aggressive trade, but usually the reason why it's aggressive is because the level is not with you. but you're betting on the continuation of momentum, right? And often you can use a relatively tight stop. It's going to be the size of that inside bar, all right? So in this case, I would expect it to be around 2,000 points, maybe something like that. It shouldn't be 5,000. It shouldn't be 8,000 points or anything like that, okay? And then you're hoping at that point, if you take that type of trade, you need momentum to follow through. If for whatever reason it finds a lot of selling activity in this area, which is highly probable, it may turn right around and start working its way back to 41K, right? So that's the next opportunity that I would like to see. And if the market doesn't want to deliver it, then I have to adjust. So like here's another scenario that you know, this is what everyone's fearing, is that it just continues, right? Continues and goes through 50K and just goes up like and starts to validate all these fake gurus calling for 100K and all that other nonsense, right? And it seems like magic and all this and all that. Okay, so that's a possibility. It can continue up into that 50K area, but as long as it keeps producing bullish candles like this, and I'm not in from a good price, I am not interested, because all I will be doing is taking the risk off of the hands of the people that were willing to take the risk at much lower prices. I'm not doing that. I don't buy highs, okay? So I want to see pullbacks, and this little red candle is not really a pullback. I want to see a pullback, and then I can judge from there. The recent pullback that we saw was this. It was tight. It was an aggressive trade. Andrew called it at like 41K, which is a little bit behind, but hey, whatever. The momentum followed through, and it worked out. It was aggressive, but it worked out. Doesn't always work that way, okay? And this same philosophy that I'm describing here is going to go for all the altcoins that follow Bitcoin. All right, so that's Bitcoin. I know that was a long rant, but yeah, that was really long. All right, let me get into the stock market real quick, and let me get into gold. But I wanted to address the fear of missing out and the fear of losing, because that's the reason why no one makes money, are really those two reasons, because everyone is driven by those. Even people with, like, you know, I have the system, and I have this, and I have that. They're still focused on the wrong priorities. Priorities should not be making money. Priorities should be conserving capital, okay? To reiterate. All right, let's talk about the NASDAQ. Now look at this. So again, this has got a lot of people off guard. It's got a lot of people fooled, in my opinion, right? It's nothing but higher lows and higher highs, and it looks like it's going to break higher. Look at the pin bar. Look at this bullish pin bar near all-time highs, right? Looks amazing. Ah, the semiconductors. Ah, yeah, right. The stock market never pulls back. The NASDAQ is super strong, blah, blah, blah. Okay, let me show you something. Facebook. That's a lower high. Okay, Facebook is a FANG leader. That's a lower high. That's not good. How about Apple? Let's see Apple. Apple's consolidating. Can't really judge that. That could be a continuation pattern to go higher. Okay, fine. How about Amazon? Amazon, that's a not such a good looking chart right there. Lower high. Okay, so the FANG stocks are starting to act a little strange. What about Google? Google is still strong. All right, higher low, may go for the higher high. Maybe it double tops. Okay, the point is there's sort of a mixed look here. They're not all doing the same thing. So, and these are the leaders. These are what are driving the NASDAQ. So in that type of situation, I put zero faith into what's going on this chart. So we have, what I see is just vulnerability. And I've been saying that since 14K. And again, I've been wrong this whole time, right? But I'm not sitting here going crazy shorting it. We've tried a couple of shorts that didn't work out very well. And, you know, we're in this stimulus market. But I recognize the environment. I recognize the risks with shorting. And I know that this thing can just continue. It's just keep pushing further because, again, it's irrational. And we're dealing with the stimulus market. But another thing that you need to point out, I need to point out that I don't know if people are talking about this in the mainstream areas because I pay zero attention to all those experts. But this is what I'm paying attention to. And this is the 10-year note, okay? The treasuries, U.S. Treasury, bonds. Now, you say, oh, that's a pretty dramatic move, right? This is basically a sign of rising interest rates. That's what that is. Especially after NFP on Friday. This is the look that we get here. Now, okay, so this chart looks one way, but look at this chart. This is the weekly chart. Look at that bearish pin bar. That's really the big highlight for me right there is that bearish pin bar, which looks to be establishing or established a lower high. All right, a lower high in a trend that was trying to make higher highs. It peaked right around, what is it, November or whatever. It had this peak around here somewhere, right? This peak, and now it looks like it's established a lower high. So if that sticks, and again, this is a weekly chart, if that sticks, that's basically pointing to a rising rate environment. We've started to take out some supports here. We have to see if this thing continues. If it does, right, we're seeing the results in gold, right? We're seeing that. Gold got hammered. What do you think is driving gold? Stronger dollar. Okay, gold really caught a lot of people off guard. We saw the double top the other day, by the way, which I was not interested in buying. But look at that mess in gold. Again, that's the kind of trouble opinions can get you into. Same with silver, XAG, USD. Silver getting hammered. What's up with this? Okay, well, look at the dollar index, vertical dollar. So that, again, is responding to rising rate environment. How did I get, Gmantle sent me 200 coins? I'm not even on TradingView. Gmantle, thank you. You didn't have to do that. Wow, the guy's sending me coins. I'm not even on TradingView. That's very nice. It's very nice of him to do that. Thank you very much. Okay, so my point is, with the dollar, this is eventually going to put pressure on the stock market if it continues. Right? It can change. But I see a higher low. Looks like it's going for the higher high. You see euro. You see euro over the recent couple of days. Inverse of the dollar, getting hammered. You see pound against the dollar, weakening. Okay, so that's what I mean. That's really where the reality is. But the market is not reflecting that yet. The Nasdaq and S&P are not really addressing that. They're not really dealing with that yet. And the market is typical for shrugging things like that off for a while before they take effect. And that could be an effect of the low volume environment that we're in and all that other stuff, right? Now the S&P, again, all-time highs. Is this going to be a double top? A Bart guy sent me 100 coins. Thank you, guys. I appreciate that. I'm not even on TradingView. Thank you. Thank you. I'll get back on TradingView. But I appreciate that very much. Thank you. It's very generous. So again, what's the deal with these, right? That's why I'm so suspect of these moves, and you need to not be complacent or get lured by all the nonsense that they're going to be screaming about at such levels. These are not supports. These are the worst places that you can buy stocks and think you're actually going to get somewhere with them, over the next couple of months, especially if the bond market looks like that. Keep an eye on that bond market, okay? Now, if the Fed starts changing their tune over the next couple of months, if they start talking about, well, we're going to change our schedule again with the interest rates, we're going to maybe rate hike, blah, blah, blah. If they start saying anything hawkish, you're going to see the wind come out of the stock market fast, okay? And that's why I have no faith at these levels, and I won't touch stocks at all at these levels. I don't care long term. I don't care what kind of leader they are. I don't care what their profits are. I don't care about any of that stuff. I'm not taking the risk at these levels. It's ridiculous. We're not even at a support level, first of all. If I'm going to buy something, I prefer to be buying near a support level, if anything. Okay, not a minor support. I want to see like a significant support. The S&P is the first support. This up here is minor. The first support is here at 42.31. We're not anywhere. What are we at right now? 44.35, 200 points away. That's the first support. I am not interested. So let everyone else get caught up in that stuff. And when they're banging it out at the support, I'll be interested. Okay, so I'm willing to wait. I don't care about missing out. I have no fear of missing out because I always know that there are more opportunities. They will come. Okay, they may take some time, but trading just to trade or just trying to make money, trying to force money out of the market's the worst thing you could do, especially if the market pays you randomly. Okay, and you're making money basically on your emotional hunches. It's just like a slot machine at that point. And I don't like to gamble. I like to at least understand the risk that I'm taking. And I like to understand or have a sense or some sort of context of the probability. Okay, is there a slightly better chance that this thing will go my way here? Or is it just 50-50? Or, I might as well just flip a coin. I'm not interested in flipping coins. Okay, so let me say that's the NASDAQ and S&P. I know I'm a little slow today. I apologize, everyone. Let me just go to the Nas. Let me go to gold. So I touched on gold real quick, but let me just talk about it again. So we had this dramatic move. I don't know what the story is, why it's so dramatic, but we saw, we see the dollar strength. I showed you that bond chart, and this thing responding to the stronger dollar situation, right? Or rising rates. Now, and Bitcoin, this is what I want to point out about gold. Gold, for the longest time, all right, we talked about it from a year ago, the high made in August, a year ago. This structure from the August high to the March low, which we took a nice trade off of that, by the way, and then we got stopped out. I took another trade near this high, got stopped out of that. That's this trade you see on the chart here. But this formation, right, that you see from August to where we are now, which is August, this formation is a gigantic wave 4. If I zoom out on this chart and I show you the bigger structure of gold, maybe I could just put this on a weekly chart. Maybe it'll look better on there without all these words in the way. You can't really see it. That structure right there that you're looking at is a consolidation. All right, it's hard to see with the words. Let me go back to the 1440. And that structure, that consolidation, is a giant wave 4. I've talked about that for a while, and I realized we were still in the wave 4 when we get this move over here, okay? Because that move should have taken this thing to 2000, but instead it failed. And now we have a lower high and a lower low. So what does that tell us? Does that tell us that gold is in a bearish trend? No. A lot of people will say it's a bearish trend. People that watch the 30-minute charts or 5-minute charts or whatever, they're going, oh yeah, bearish trend, it's going to go to zero now. This is not a bearish trend. It's a consolidation. The momentum is bearish, yes, but this is not a trend. We have a range low at 1675 or whatever that is. As you can see, buying stepped in right in that area, and we have a range high around, what is it, 1900? That's the range. And Bitcoin, the reason why I'm pointing this out is because Bitcoin can do the same thing. Bitcoin is not out of its wave 4 consolidation. In order to prove that it is, it needs to take out 64K. And some people say 64K, by the time it takes that out, we're not going to miss all that. You don't have to miss it. But what you need to understand is the possibility, the high possibility of it faking out like this, okay, and getting caught in this nonsense because, you got lured in by some hype saying, oh, it's going to 100K, don't miss the train and all this other stuff. This is the situation that it's in, and it can just do it. Markets are irrational. There's nothing rational about price action. It's random and irrational. So the market's going to do whatever it wants to do for whatever reason. So instead of trying to figure out the reason why, you look at the levels and you say, well, is this a level that can typically attract buying activity or selling activity, right? That's really what you want to know. In a range, especially a wave 4 range, you're looking at the range lows because why? It's a great spot to be buying. Now this thing tapped the range low today at some point, if that's a true price, at 1677, and the candle still kind of looks ugly, although there's that nice long pin bar. I would leave gold alone until it settles, but that's an attractive area, the high 1600s, if it can go there and produce some kind of buy signal. That's a support at a range low of a broader wave 4, right? 30K on Bitcoin was the same type of situation. So if 30K is tested again on Bitcoin, which is hard to believe that it would do that right now, that's the kind of mentality I'm going to have there. Wave 4 bottom, okay, which is a high probability area for buying activity. That's all I'm interested in. I don't care about what anyone else says. And usually when it's at such a bottom, okay, usually when it's at such a low, when it's in this area, all you do is get extreme bearish sentiment. You're going to see all kinds of, gold is doing this, and inflation, and the dollar, blah, blah, blah. All this economic blah, 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 and it's meaningless. All right? It's not going to help you as far as timing the market. Markets are irrational. The smart money is way ahead of these experts you see on TV. Smart money doesn't make decisions by watching garbage on TV. You shouldn't either. Okay, so, all right, anyway, so that's all my rants. Man, I talk too much, 34 minutes. I usually finish this in half the time, but I did want to talk about, the fear stuff. All right, so let me get to your questions now. Plus, I'm not on TradingView today, so I should have a better chance at answering your questions. All right, so I answered that Bitcoin. So, Alex, I answered that. Cool. Okay, hey, Shashank, Why is Bitcoin always follows you? That's a funny question. Yep, I know he's joking. Bitcoin's not following me. I'm just looking for opportunities in it, and if it wants to deliver them, that's up to it. But I know that Bitcoin, the market knows all. I don't know anything, right? And that's the way I look at it. And the market is always right. When the market adjusts, I simply listen in a passive way and I adjust. I have no opinions. People always ask, "What's your opinion of this?" I have zero opinions. I have no bias. It's the market wants to do whatever. I'll go by what the structure tells me, and then when it changes, I'll adjust. Okay, Luna. So Luna USD. So GoForth is asking about that. Now again, like I said with these altcoins, there's going to be a lot of the Bitcoin followers, of course, and Ethereum and all that stuff. There's a party going on again. Everyone thinks, oh yeah, right, the altcoins are back in business and blah, 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 blah. Right, great for the people that bought in this consolidation area and breakout. Okay, great. Not good now, okay? I'm going to say that about all of these. So here's the thing. If you're in from the lower prices, this is not a bad place to take something off the table. Why? Well, you have some old resistance right there. Right, old support. See this area right here? Old support, new resistance, and you can see price reacted to it a bit there. So you're kind of conflicting with that right now at the moment. Now it's possible that you get a continuation pattern, right? The higher low, which is trying to establish itself right now, and possibly the higher high. That's all possible. But again, here's what you have to keep in mind. This follows Bitcoin. It doesn't follow itself. So if Bitcoin fails somewhere between here and 50K, how much further is this thing going to go? Do you think this thing is going to go all the way back to these highs of 2240? You think it's going to go all the way back up there? That might coincide with 50K on Bitcoin or whatever, slightly higher. So the next question is, what's a little more reasonable? I think the all-time high there, it might be a little unreasonable, but this area here is a little more reasonable, right? The lower high, there's plenty of resistance right here. You got those pin bars all over the place in that area. And what price is that? So that's around, we're going to round that to $20, okay? So you're looking at a possible $20 profit potential. And what's that relative to your risk? Well, where's the risk? If you use the current candle as your risk and put your stop slightly below that, which is what, 1296? So you figure 13. So the stop would have to go probably around 1250 or maybe even lower. What's this level here? 10. So let's say 12 even. And this thing could possibly or reasonably run to 20. Okay. So you're risking, this thing's at 14 right now. So you're risking about 2, maybe 2.25 points to try to make 5 or 6. That's attractive reward risk, right? That's about 2 to 1 or slightly more than. So that's a worthwhile effort as long as Bitcoin agrees with you. Now, again, if you're not willing to take that 2.5 point risk, because the risk is defined here by this structure and this needs to follow through, but that's a chance you take. If it doesn't follow through, that's a chance you took and you take the loss. You don't sit in this thing and say, well, it'll come back. And then this next thing you know, this thing is like testing, $8 or whatever, and you're like, oh man, I'm caught in this thing now, right? And it's possible because that is a support level, and that would be a highly attractive support level. Great place to be buying if it can get there, but until it does, you need to keep that risk very tight on these things, right? In case, like I said, Bitcoin can erratically, out of nowhere, pull a gold move and give back. It's at 46. Next thing you know, it's back to 41, and you're like, I don't understand. And some stupid news, oh, this guy came out and said this, or oh, whatever, right? And it comes out of nowhere. And then you say, oh, these charts are pointless. It's really about the news, but it's not about the news. The news is something you can't get on a chart, right? The news is a random piece of information that the market has to price in, right? Now, of course, there are people out there that know the news before it's going to come out. Those are the insiders. They have the advantage on you. And especially in this space, there's nothing you can do about that. Right? In the stock market, it's illegal. In this space, there are no rules. So, become an insider and get inside information and you'll do much better. Okay, anyway, but that's the reward risk with this thing. As a retail trader, we have no choice but to guess on incomplete information, and that's the best we can do. So it really all comes back to, are you willing to take the risk or not? And another factor, which I'm not really talking about here, is, we just talked about a couple of dollars of risk, but what percentage of that is going to be reflected in your account, right? That's the other thing. If you have $1,000, right, you shouldn't be risking 20% of your account on such a move. That's too much, right? You should never be risking 20% of your account. Although I got people all the time risking 50% of their account. It's ridiculous. You cannot make money in the long run taking those type of risks. But the reason why they don't want to take smaller risks is because the reward is a lot smaller. But that's a really bad reason, because yeah, they want to make the big reward in an environment that's highly random, and chances are you're going to be wrong. You want to take big risks in that environment? That's why no one makes money, or one of the reasons why. Okay, anyway, good question on Luna. I hope that helps. Erhan. Okay, greetings from Turkey. Okay, welcome. Yeah, by the way, if people want to put what country they're from, that's cool. That's usually an exercise I like to do on TradingView. I'm not on TradingView today, but if you want to put it here, that's cool too. That's no problem. Hey, Chris, any time frame to wait to buy new alt after it hits CB Pro, ACHUSD? All right, so let's see. Let me just put the chart up. ACHUSD. All right. Oh, okay. So he's asking about basically when an altcoin gets to Coinbase Pro. Really, that's a random event, right? Unless you know in advance when it's going to go on to Coinbase Pro. I guess sometimes in these chat rooms that whoever the developers are for the coin, they'll release that information or whatever they do, right? They give out information as an incentive to be buying the stupid coin that usually has no value anyway. And then when it gets to Coinbase Pro, everyone piles in. Now, what do you think is going on here in this situation when it gets to Coinbase Pro? All the people that knew it was coming to Coinbase Pro are selling it to all the people who don't know any better because they're buying it on Coinbase Pro, right? That's so I really don't have any advice for something like that, except find the community or the chat room or whatever. The developers are giving away information, and maybe you can get yourself on some inside information and then find that out, and then that's when you start buying the coin before it gets to Coinbase Pro, and then you're one of those who sells it to people who don't know any better, right? That's your typical, that's the typical process, okay? And like I said, when you listen to fundamental analysis, technical analysis, all this and all that, it's coded in this academic blah, 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 and a lot of that's meaningless, really. It's really, it comes to who knows what information, and when you don't know that information, that's when you have to really use the charts, not to try to figure out where it's going to go next, but more to measure the risk and the probability. That's really what I'm doing here with these charts, okay? A lot of these guys, a lot of these fake gurus and stuff, I'm going to predict Bitcoin's going to go here. Let me show you, I'm going to do this measurement here, and I'm going to show you this oscillator. And basically, if this goes to this is going to be 50,000 and blah, blah. It's all nonsense, okay? No one knows anything, and that's the reality. I know a lot of people don't want to hear that. All right, Shashank, please take a look at another lottery coin. I remember when Shashank used to call XRP, he used to call it garbage coin, because I used to call it garbage coin. Now he calls it lottery coin. Okay, that's an improvement. It's better than garbage coin. All right, so let's see, XRP. Now, so again, we know that this is a Bitcoin follower, and it's trying to improve. Look, you have the structure, the higher low right here. See that? That's all good, right? That's all good. You have the higher high, and it looks like it's trying to go for the continuation pattern, all right? Now, again, that's all good, but what is the resistance area? All right, let's look back here a bit, because there's all this price action back here inside of this consolidation. So you have like a level right there, you have like a level up in here, and you have a level like right around here, right? Those are basically the resistance levels that you're now facing going forward from here, right? That's your resistance area. And it's trying to go through, right? But again, it's going to depend on Bitcoin. So as far as reward risk goes, if you buy this in hopes that it can push through and you can reach one of these potential profit targets, right? Because those would be good places to get out of some. Your risk is going to be defined by this higher low. You can't really go by this single candle, especially on these lower priced garbage coins, because the price action is very erratic. But this chart looks very similar to Bitcoin, really, to be honest. The low here is 69 cents or 69 and a half cents, right around here, right? That's the low. That's where you're defining your risk from. So if you buy this right now, it's at 81 cents. You're looking at what? Maybe 12 cents of risk, right? Give it a little room. Can you make 12 cents in something like this if the momentum follows through? That's the question. 93 cents is like this midpoint here. And you're, all right, so it's within reason. I would give that like a maybe slightly better than 50-50, okay? Because, I mean, you have the momentum, you have the structure going your way, you have Bitcoin agreeing with you right now, and so you have all that, right? And that's where you would have to, if you get into something like this, and you manage to get to that price, you need to take something off the table, okay? Or people, I'm not saying you in particular, but in general, that price, you need to reduce risk there because that's when you're now greater than 1-to-1. You're starting to push higher than 1-to-1, and that justifies the risk that you took because who knows how far it's going to go, right? People right away, they go into, I hope this may be the run that takes us to new all-time highs and I'm going to make $1 billion in the next month, right? That's the hope. And then they watch their favorite guru and he reinforces that. But meanwhile, it's random. We don't know if it's going to stop here and turn around. We don't know if it's going to stop here and turn around. It's really going to depend on Bitcoin. And if Bitcoin fakes out between here and 50K, it's very likely that this thing stops and turns around somewhere in this range. So that's why when you justify your risk, you must start getting out of some. Now, it doesn't hurt to let some ride when it's going your way. Nothing wrong with that, right? When I say exit, you don't have to exit the whole position. There's nothing wrong with letting a market pay you when it wants to pay you. But when it starts to give you a hard time and you haven't taken any profits because greed steps in or you're hoping you don't want to miss any more, then you're just gambling because you're not going to get the top. Okay, and you're hoping, it's again fear. You're afraid of missing out of more. Meanwhile, you're taking a gamble. You're risking the money, the profit that you have in hopes of making more when the probability is not with you. Okay, in that situation. So thanks for asking, Shashank. All right, let's see what else we got here. Got a lot of questions. All right, and I appreciate everyone's questions. So I'm looking at Julio. Hey, Julio from London. Nice to see you again. I had a stop buy, okay, at 120. What would be a reasonable target to go for? Okay, so CRSP, let's take a look. So a buy stop. And he said what price? 120.68. So I'm guessing that's around here somewhere. Let's see, 120.68. Okay, so you got like this low over here, right? And it tapped you in. Beautiful location, right? So you're in from like over here. Nice, very nice. So you're asking now where you should be, what targets. Well, first of all, look where you are. You bought near the range low. This is beautiful. That's where you should be buying, right? That's a great entry, all that stuff everything you did there was right, okay? Makes sense in terms of the structure, the reward risk, all that stuff. Now, look where you are. You're in the middle of this range right here, okay? This range from this low to this high up here, you're right in the middle of that. And look at the current candle. Giving you a pin bar. Is that a coincidence? It's not a coincidence, right? People know that the midpoint is a good place to get out, right? That's just a natural thing. It's 50-50. It's random, but often when you get a push off the low, a good place to start exiting is around this point, the midpoint, okay? Not buying it. So to answer your question, this area would be a good place, right? What is this, 137 area? Not a bad place to start reducing risk, especially in the face of this pin bar. Okay, you have that bearish pin bar. Now, the bearish pin bar isn't activated. You need to take out the low to activate the pin bar, meaning you have a sell signal at that point. So it's not there yet, but the market's going to close here in just a few minutes, and it's very likely that tomorrow it takes out that low, which means you'll have a sell signal tomorrow. All right, so it doesn't hurt to take something off the table. You should have taken some off by now because you've gone beyond the midpoint. And by the way, you've done way better than your initial reward risk, right? Which was probably what, 2-to-1 maybe? I don't know what your reward risk was, but at this point, I mean, if you're long from 120, whatever, and this thing's fooling around 137, your risk should have been around so you're looking at about 7 points of risk initially, something like that, based on this structure, and you're much higher than 7 points in the trade. So you're way over 1-to-1, right? So that's a winning trade. even if it goes higher and you get out of the whole thing, you've done your job, right? You've won more than you risked. That's the best we can do. Not get the top. We don't know how much higher it's going to go. Anyway, so my point is, you should be out of some. I mean, in my opinion, you should be out of some. And then if you want to try to give some a chance to ride, then that's up to you. Okay, you may get a tight pullback and you may get another leg higher. That's possible. But keep in mind, now this is a biotech stock. So these stocks tend to be less correlated to the NASDAQ and S&P, and they tend to be more sensitive to their own news, right, and their own industry stuff. That's a good thing, right, which means it can do its own thing. And so if the S&P sells off hard, you may not be as affected in something like this. That's a risk you must always consider, especially in a market stock, okay, a market stock like Microsoft or Apple or, you know, whatever, that basically is the market, right? This stock is not the market. It does its own thing. So that's how I would treat something like this. You want to give some a chance. Maybe you get out of, you know, I don't know, 50% of it here, and then maybe you try to give some a chance to see if it could work its way a little higher. But don't go crazy and expect new highs, right? Maybe you get the higher low and it makes one more attempt. If it fails on the second attempt, then that would prompt me to get out of more. Okay, that's how I would treat something like that. So good question and nice trade. Thank you for bringing that one up. Did you get that trade idea here? I'm just curious. All right, let me see what else we got here. All right, so Sean, hey Sean, good to see you. What in the gold and silver? Yeah. So like I was pointing out earlier when I talked about the gold and silver situation, just irrational, whatever, right? Overreactive. Those metals tend to be emotional to begin with. And like a big problem that I notice when it comes to those is people are too heavy on the opinions. Oh, we're inflation, so it must mean this, right? And too much conventional wisdom nonsense. Meanwhile, we're in the middle of a wave 4 still. So that's why, again, price structure levels. Right now, I like the location of gold. I like it. But there's no stability there. So I'm just going to leave it alone until it shows me a better look. Also, we are fighting the dollar now, right? The dollar is vertical, and that may be why gold is overreacting the way it is. Stronger dollar, reflection of higher rising rate environment, which is not good for gold because that's anti-inflationary, right? Now, I'm talking some logical things there, but that's your typical market. Those are your typical market mechanisms. Now, whether the market follows through on those, on that type of mechanism is a different story, but that's usually how it works, right? Over time, higher dollar is usually bad for gold or anything that's anti-inflationary, usually. So it will put pressure on it, right? Now, gold also has its own variables, right, that can come into play at some point, but I wouldn't go crazy trying to figure out why. Just look at the levels. We find a support on gold, it shows stability, then I will measure the risk, right? And if the risk makes sense, I'm going to take a look at that dollar chart. If the dollar chart is still vertical, I'm not going to touch gold until I see the dollar starting to show me at least some potential sign of pullback or something, right? Because that will give gold the boost that it needs to start, getting its act together again. Also, the bond market may give us clues. But like I said, if we go into a rising rate environment, I'm going to hold off on gold, all right? And at some point, the Fed is getting pushed into a corner. And at some point, they're going to have to give up their political affiliations or whatever. They're going to have to do something. Otherwise, we can have hyperinflation, and you know how all that goes. So I don't really, again, I don't go on those opinions. I don't trade on those opinions. I just want to see the price action. So anyway, that's gold again. But I talked about it earlier, like 30 minutes into my stream, so you could check that out if you haven't. Hey, Gotham. Hi, greetings from the Bay Area. Hey, welcome. I stream isn't available on trading. Right, okay, I answered that. Okay. Monica, hey, from Switzerland. Hey, welcome, Monica from Switzerland. We got Ifat from Iran. Hey, welcome, Ifat. Open stock, please. Okay, open. Yeah, again, I'm sorry I'm a little slow today, but I appreciate everyone's patience and I appreciate all the great questions. I really want to try to answer them all. So, open door. Oh, I think someone brought this up the other day. Looks familiar. All right, so here's the thing. Right away, first thing I'm looking for, support and resistance. I mean, general trend, there's not much to say about general trend because we had a bullish situation back here. It gave it back over here. Okay, fine. And now we have this possible double bottom situation developing here. Okay, so here's the thing with this. You right now there are some conflicting structures, right? You have a lower high right there. You also have another lower high, this double top right here. As long as those structures stay in place, then the general structure or the general favor is for this thing to break lower, okay? But it's been refusing to break lower. We have these little double bottom, triple bottom situation right here. So that is a sign of a beginning of a potential change, but it has to prove itself. And that's what it has not done yet. So in a situation like this, I mean, you could be aggressive and you have this buying candle here right now. You can just buy into that and hope for the best, all right? And measure your risk from 14.39, so you figure 14 and a quarter or 14 even, which is around here, this area right here. And if it goes below that, you just get out because the structure favors a break of the support at this moment. That's the aggressive thing to do. The conservative thing to do is to wait for this mini lower high to break, which is 15.44. So you figure 15.5, okay? If 15.5 is taken out, now you have a resistance that's taken out. Usually a weak market doesn't take out resistance levels. It usually respects them. So if it clears it, now you have a confirmed change, okay? Now, do you buy that breakout? You can, but your risk is going to be a little higher. If it fails, again, you have to respect your stop. So those are some possibilities. Or you can wait for the thing to break out, pull back, which it takes a lot of patience because it could take a week or two to do something like that. Breaks out, pulls back to this old minor resistance, and that becomes a new support. That's the more conservative thing to do because it's proven now that it's trying to do something and you're buying it on the pullback, right? Which means you're going to have people banging it out thinking that broader trend is still in play and you can get it at a better price while the structure is improving. All right, so it's not the best price, but what you're sacrificing is the best price for a better structure. And if the structure stays that way, then you're going to start to see resistances get taken out. And then after a while, you could be you're an early buyer. And then you have the luxury of watching this thing start to test resistance levels. And if it starts breaking them, you're in. And you can just, you have the luxury of watching them to see how they behave at those levels instead of, should I get in? Should I buy that breakout? Well, no, you're in. Okay, and now everyone else has to wonder, should I get in? And if it starts to hesitate, you can get out of some, right, and reduce your risk. So those are your considerations right now. So not a bad location in general. I'd give it that because it's arguably a broad higher low relative to this structure way back there, starting back there. So you have that. It just, you need to get this thing going here, all right? So the most important part of that is the risk. And you have to decide how much risk in terms of size you want to take on something like that. And if you want to be aggressive now or if you'd rather wait and let it prove itself a little bit more. Like I said, there's no fear of missing out. If there's some news and this thing gaps 10 points, well, you miss it. No problem. You move on and you find another opportunity somewhere else because there's plenty of them. Okay, so thanks for asking. Open. Nice one for the radar. Okay, David, hey, from France. Hey, welcome. Would you invest in SLP USDT now? It jumped 30%. Okay, well, I'll tell you right, just from that comment, jumped 30%, my answer would be no. But let's take a look at the chart. Because when something jumps 30%, right, the traditional thinking is that's a good thing, but I don't see that as a good thing at all. All it means to me is you're taking it off someone else's hands that took the risk at 30% lower. So here's the thing. First of all, invest is a strong word. How much is this thing? 21 cents? Yeah. I don't really like to invest in altcoins, especially these. I mean, it hasn't been around. We don't have a lot of price history on this, right? Looks like going back to March. What is this thing on? Binance? Okay. Yeah. So obviously it's reacting to Bitcoin, the recent Bitcoin push, right? It's green. Bitcoin's green too, but I'm only interested really in levels. So I would think of this as more of a swing trade anyway, not a long-term investment. That's just my view on these coins. Maybe you know something more about the project and you believe in it. That's a different story. But most of these are lottery tickets. Most of these are going nowhere. Okay, that's just the way it is. Some of them will go somewhere, but there's no way to know which ones are going to go somewhere in the future and will not. But short term, you know, you could work with these price structures and try to get something out of them while people are willing to buy them. So here's the thing. You have this jump today. Okay, cool. I wouldn't chase this. The way I would look at this is something like this. You have a level right there that's established, and that level, it's a nice level because you have this structure behind you, right? So basically, it's what I would like to call a failed low. It tried to go lower than this low back here, and it really has not gone a lot lower than that. So it's a failed low, and price has jumped right back into that vicinity of this price area right here. So that's a good sign, okay? That's a sign of strength. Now, as far as taking risk, again, this low is 17 cents around there, and this thing right now is at 21 cents. So you're looking at 3 cents of risk. A big part of this too is how much money you're putting on the table. You know, obviously if you put $100 on the table, a 3-cent risk is really not going to be very harmful to you. But if you're putting $50,000 on the table, that's that's a lot more at risk. 3 cents is going to be a lot more expensive, right? A lot more leverage there. So I would look at it this way. If you're willing to, if you're working with smaller numbers, you're looking at 3 cents of risk. The question is, how easily can you make 3 cents in something like this? Where's 3 cents from current prices? 24 cents, around there. And recent highs on this thing, right? The midpoint is around, what is that? 26 cents, the midpoint, which is a good place to be getting out. Okay, so you have the reward risk is with you there. You're risking 3 cents to try to make maybe 4, maybe 5 cents, right? And that's exiting around the midpoint if it gets there. If this thing can really get its act together and start moving, then you're looking at great reward risk, right? Up in this area, if you're managing to exit up in there after taking 3 cent risk. So you have that opportunity now, all right? Just based on what I'm seeing here on this structure and looking at the reward risk. That's why, I said right at the beginning, 30% higher, I said no. But, when I'm looking at the price structure, I'm looking at how much this thing is, and I'm looking where your nearest support is. Okay, yeah, I mean, it's within reason. But a more conservative thing to do would be to wait for a test of the low again, right, for a double bottom, which is possible. Or you may get like a little tight mini higher low situation, right? May pull back into here. This is like I was waiting for 35K in Bitcoin and we never got it. We got 37K instead. This thing, in this thing's case, you're looking at maybe pulling 1.5 cents back, something like that. And it's like halfway there now. So something like that may give you a slightly better price or whatever, and still you're going to measure your risk from that 17-cent low, okay? And then you have to see where this thing goes. Again, you're going right into this resistance area right here. That's not going to matter so much if Bitcoin follows through. Again, if Bitcoin does not follow through, you're probably going to see test of low, okay? So why not, if you can get a better price and it stops out, why not take a smaller loss, right? Like I said before, your priority should be preserve capital, risk first, not how much can I make, right? Always look at the risk. So I hope that answers your question. Again, I'm not a big fan of swing trades in these lower priced coins. I'd rather do them, if I'm going to do a swing trade, I'd prefer like an Ethereum, a Bitcoin, a Litecoin, something at a much higher price and something that moves, like seriously, right? Those things move. There's plenty of coins that move. All right, so thank you for asking about that one. Let me see what else I got here. Any good FOMO resources, things to understand psychology? Chris, that's a good question. I don't have any specific books. I mean, it really comes from experience, just understanding the herd mentality. If you can, there's a lot of research on herd mentality, not necessarily in light of the stock market, but just herd mentality, how people act in crowds and all that kind of stuff. All that stuff is relevant, right? So if you Google just like herd mentality behavior or crowd psychology or crowd behavior, that kind of stuff, you can pick up some interesting insight as to how people behave in a crowd. Now here, of course, in the market, most people are not together in a room, like they used to be in a pit in a like, you know, at an exchange, people are watching screens. And on the screens, they're all seeing the same information. They're all consuming the same information. They're all listening to the same authorities. And all these authorities are doing the same things, right? Which are mostly just, they're amplifying what's obvious, right? So they're appealing to people's emotions, and they're selling hope most of the time, right? Across the board. I see it everywhere. So as long as you're consuming all those things, you're likely to act, you know, emotionally like everyone else. That's what you need to understand, and that's what you need to avoid doing. Okay, so thanks for asking. It takes a long time, by the way. It took me a long time to get that stuff out of my system. All right, let me see what else we got here. So good question. Just going through the chat. Oh man, how did I miss all these? Okay, here we go. Monica, can you please look at EOS, and BCH? All right, sure. How am I doing with time? Okay, not too bad. I spent a lot of time on my own rant, and I apologize for that because I'm not sure if I'm going to be answering everyone's questions. All right, so let's take a look at EOS, USD. Oh yeah, so something like this. First of all, this thing should be doing better than it's doing. All right, relative to like where Bitcoin and the rest of the market is, this thing is just pushing this resistance here. It looks similar. If actually, you can compare the Bitcoin chart to this, and the structures look similar. But this movement, relative to like some of these other charts, I don't know. This thing should be doing much better. It's only up. What is this thing up? 23 cents. I don't know. I don't like the fact that it's not really doing something more dramatic. Although it's broken its resistance. So in this case, if you're looking for a swing trade of some kind, the best thing to do is, well, there's two things. And I've talked about this before with the other coin that we looked at. You can go for the continuation pattern, but you need Bitcoin to follow through. Remember, this is Bitcoin's party, not EOS. So if Bitcoin fails, or the party stops, and Bitcoin, all of these coins are going to do the same thing. So a lot of your answers you can derive from Bitcoin. So again, to answer your question, you can try going for this continuation pattern, right? Measure your risk from this low over here of $3.86, right around there, right around that area right there. And then at that point, hope. I don't like to use that word, but that's basically what you have to do because you need Bitcoin to go with you on this. So you need to hope that you can do better than 1-to-1 at that point. And the only way you're going to do it is if Bitcoin follows through and you see Bitcoin pushing the 50K. If Bitcoin fails and you see it back at 41K, all of these things are pulling back. And you'll have a new buying opportunity just like you will in Bitcoin. Okay, so thank you for asking about that. Now, mind you, some of these coins here, let's take a look at BCH too. Some of these coins may have more of an exaggerated look, right, than Bitcoin. I mean, look at BCH. I'm really not a big fan of this coin, but this one looks very similar also to Bitcoin, right? When Bitcoin was about to break 28K or whatever, right here, look, double bottom. Same deal. So it's following the party. It's the same situation. You have these potential continuation pattern things going on right now with these outside bars. Again, you're taking a lot of risk because you're going right into these resistance areas right here. All right, these areas are still here. People are ignoring them. They don't realize that this plays a role, but that's what you're going into. So is it going to get through that? It can, if Bitcoin can. If it can't, this thing's going to turn right around in everyone's face because you're in such an area, right? Keep in mind, there are people that bought all throughout here, and you're just conveniently taking it off their hands. Okay, because they know, often smart money or experienced traders, they know to be getting out in this area. Okay, I mean, I would be if I was in from those lower prices. I mean, look at our price targets for the trades we send out. Where are they distributed? Right, we're not looking to take on new trades at these levels. So yeah, so that's the story with that. And like I said, most altcoins are going to have the same type of look. All right, so thank you for asking about that. All right, let's see what else we got. So that's BCH. Edgar from Philippines. Hey, Edgar, welcome from the Philippines. All right, can you please take a look at CTSI? All right, CTSI. Let's take a look. CTSI. Why am I not getting that? I have the right symbol here? CTSI. Oh wait, CTSI. Is this a coin? I'm showing coins here. CTSI. I'm not showing any stock. I guess it's a coin. Oh, well, that makes sense. Okay. So this is, all right, this, when you see this, right away, avoid. Okay. This right here, this is pure herd mentality. This right here is usually a chat room. They're pumping something, okay, whatever, and it gets out of hand like this. If you're in from lower prices, like the chat room people are, I say chat room because often there's some kind of network, some kind of online community somewhere where they're pushing something, okay? If you're in from those prices, definitely should be getting out of something. Look at this pin bar, right? So don't know how far something like this is going to go, but this is herd mentality. So again, can't buy new coins here, would not be buying new coins, would not be taking risk here. Who knows? It may go higher, it may pull right back. There's no way to know, right? You are in this resistance area, just like all those other coins. You're right in that area. I mean, and you notice the pin bar, okay? So obviously someone knows to be getting out of their coins, you know, in that area. I wouldn't go near this thing. So the best thing to do now, if you're not in it, is look for the next supports, right? You have some support in this area right there, which is an old resistance, which it cleared, but we have to see how it stabilizes over the next few days. What price is this right here? 77 cents, so you have that. And then you have this one over here, this area, which is that breakout price, which is what? 49 cents, basically, 50 cents. Those are your supports. So either it goes there and gives you an opportunity, or it doesn't go there and you do nothing because the risk is too high. All right. Often, again, what people will do is they'll just jump in, hope for the best, and then it goes to the supports, and they're like, oh no, it'll come back, and then it goes even further, and this thing goes to, like, you know, starts breaking all kinds of supports, and then you're losing 60% of your money or whatever. You need to avoid that. That's the only way to avoid that. All right, is by just staying out of these situations. So thank you for asking. Hey, Bart, DEX. Okay, let's take a look. Let's take a look at that. Hold on. DEX USDT. Not putting the right symbol in. Oh, E. Okay, got it. Here we go. All right. So not much price action on this here, right? Look at this. Not much price action. So all we can really do with this is you have a higher low right there. You have some resistance up in here, and that's all you got, right? You have an inside bar developing here. It's red. If you're not in it, there's nothing to do, all right? You can wait until the inside bar high is taken out. That would be a buy signal to see if you can get back into this resistance area here. If you're making more than 1-to-1 reward risk, you should be taking money off the table. Risk can be defined at this point. How much is this thing? $13. This low of 10, so just around that 10 area, maybe 10 and a half, right? That area right there, that's where you're defining risk from. If it goes there and takes it out, shouldn't be in it because, you know, again, that it shouldn't take out a support if it's going to be strong. I don't know anything about this coin or what it's doing. This is not much structure to judge by, but it is an altcoin, and I have to assume that at some point, if not now, soon, it's going to just start following Bitcoin or Ethereum like the rest of them. Right? So, but based on what I see here, you cannot assume that it's doing its own thing. Unless, of course, there's some hype coming out and you're in the room and you get the hype first before everyone else, then you have an advantage. Okay? Like that one we just looked at. So thanks for asking about that. Shayshank, sir, always with 90% accuracy. I appreciate that, Shayshank, but I'm just following, if you're referring to Bitcoin, I mean, I'm just following the levels and the price structure. And that's all I'm listening to, nothing else. So that helps me at least be more in line with market intent, basically what I like to call context. That's what allows me to at least be more in line. And when the market changes, because I'm wrong sometimes too, when market changes, I simply adjust. Sometimes if I'm in a position and I'm wrong, I take a loss. I mean, but I was willing to take that risk to begin with. That's the whole thing. Okay, so and I know that well. So thanks for mentioning that. Thank you for saying that. Joel from North Carolina, welcome. Thanks for your streams. Been helping me more. Okay, cool. Can you take a look at AGNC stock? AGNC. Let's see. What's the story with AGNC? Interesting. So let's zoom out a bit, right? If you notice on the stream, I never look at like 4-hour charts or 1-hour charts or whatever because they're meaningless, right? For this time frame. Nice trend in general. Higher lows, higher highs, okay? Up until this point here. So that's good. Now, you have a pullback. So it's corrected a bit. Okay, no problem. And it's corrected into an old resistance area, right? Acting now as a new support. That all makes sense in the context of a bullish trend. Now, let's zoom up a bit and see what the more recent price action is telling us. So we have a double bottom in place right here. Okay, that's good. That's what you want to see here. What price level is that? 1563. All right, and now you have this outside bar that basically developed today. Now, so the question is this a decent swing trade? Well, I'll have to say, yeah, it's not bad. You have a lot of things going for you here. The risk can be defined at basically, we'll give it 1550. This thing right now is at 1604. Maybe you want to give it a little bit more room. Maybe 15 and a quarter, maybe 15 even. Something like that is where risk will be defined. Now you have a lot of profit potential here. So if you're buying this thing around now, all right, or maybe you wait till tomorrow and it breaks today's high or something like that, right? Which gives you, that's a good reason to be getting in. Where is your first resistance? And you know, you're looking at like up in here somewhere. You also have some resistance right there. Those are potential profit targets or points where you should be exiting something, right? So is that greater than the risk you have to take? I'd say so, right? So again, if you're buying it, let's say you're buying it at 16 and a quarter and you're putting your stop at 15 even, that's $1.25 of risk. What price is this over here? This is, hold on, let me move that thing out of the way. What's this price here? 1670. You need to do better than that. So let's see, what's this over here? 1732. So around there, right? If you're buying it at 16 and a quarter, 1732, you're almost at 1-to-1. It needs to go there for you to get almost 1-to-1. All right, at that point. I mean, that's kind of ridiculous, I think. That, you know, again, what's this price here? Am I right? It's 1565, right? So we're saying 15 even. And right, we're giving it a lot of room. All right, so maybe we don't have to give it that much room. So we'll say 15 and a quarter. Okay, what's this low here? 15 and a quarter. And you're buying it, so $1 of risk. So you need to make $1. All right, so basically low 17s. All right, you can get 1-to-1 somewhere in this area here. It's within reason. That's really where your expectations or your exit expectation should be, right? That's where you should be looking to get out of some. And then after that, once you meet your reward risk or slightly better, then especially if it's not giving you a sell signal, you just let it run and see how far it wants to go from there. It's possible that you may want to close this gap up here. It's possible. What price is that? 18 something. So that would be a home run at that point if it could make it back up there. So it's not a bad idea. Now, it's an investment corp, so I'm not sure what their story is as far as what they invest in, if it's financial, whatever, blah blah blah. But I'm gonna guess that they're probably in line with the banking sector. Okay, and so if they're in line with the banking sector, you just have to be careful with the interest rates, right? I mean, why did this thing get beat up like this in the first place? It's possible because we've been seeing the bonds selling off, and interest rates affect financial companies, right? So just something to keep in mind. You can't really trade on that information, but it's a risk that can cause this thing to go right to the stop. It's just another risk factor that you're dealing with. And the bonds right now don't exactly look bullish, okay? Meaning rates look like they're rising. All right, so just something to keep in mind. Maybe that will prompt you to wait a little bit more on this. So thank you for asking. All right, we don't always get perfect information. Gotham, Chris, Trading for a Living. That's a good book. Those are both of those. So Gotham, you bring up two very classic books. Those are old books. Most traders years ago, we were all told to buy those books. I've read them, and yeah, they're definitely good books. They sometimes it may be hard to relate to at first in some of the situations. They're the type of books that you have to read multiple times. Let's just put it that way. But definitely good books. So thanks for putting those. Thanks for sharing those. Kim, can you look at Adam? Sure. Okay, let me see how I'm doing with time, because I'm going to have to wrap. Okay, I got a few more minutes. And I'm going to see how many more questions I can get through here. Adam USD. All right, so look, this is another repeat of some of those other coins we looked at, right? It's the same situation, except this one, right? The other ones looked like they were sort of like breaking out nicely. This one, you're stuck right there. You got that resistance like right in your face. So I'd choose another coin, okay? Like some of those other ones we went over earlier, they at least had slightly better structures compared to this. Because again, if Bitcoin flounders or fails, you're at the resistance right now. So yeah, you may get the continuation pattern, you may get the breakthrough. So if you want to bet on Bitcoin, which is what you'd be doing, then you're going to have to define your stop most likely from this low right here, 11.95. Say figure maybe 11.50, something like that. And this thing's at 13.89. You're looking at a couple of dollars of risk. And you have to hope that Bitcoin follows through and you can get to this old resistance over here. Right? I'm sorry, new resistance, old support right there, right? That's your next level, is right around there. And that is what price? $20, right? And nice whole number too. So that's what you're hoping for. So you're risking, you know, let's say $2.5, $3, and you're to try to make almost seven maybe. That's greater. That's greater than almost greater than 2 to 1 or whatever, slightly around there. So that makes sense if you're going for something like that. So this is basically your area that you need to get through, and up in this region of it, right, up in this area is really where you should start taking money off the table, because that's when you'll start going to better than 1 to 1, right? And as you continue to progress through, you know, you get to 2 to 1. And that's really what this is all about. It's the reward risk, right? I could sit here, we could talk about millions and millions of charts. They mean nothing. It's about how much risk you take and how much the market pays you and how much you take off the table before the market goes the wrong way, because we cannot assume that these things are going to continue higher to all new time highs. I'm not assuming that at all. I'm staying away from that idea because, like I said, Bitcoin, first of all, would have to do it. And until Bitcoin clears 50K, I have very little faith, especially because we're in a broader wave 4. And it's very possible that we see a move like, you know, the rug getting pulled out from like gold, that kind of situation. It's very possible that we could see that in these, and all these coins are going to go the same way, right, as Bitcoin. So that's just something you have to keep in mind. And for that reason, I keep my expectations very conservative. And that's why what I'm showing you here are conservative expectations. If I was just, you know, wild and aggressive and just irresponsible, but yeah, put your target up there, because yeah, you know, these things are Bitcoin's gonna be at 100,000 in a couple of months, and all these coins, this is the time, the party is back, yeah. That's what, you know, a fake guru would be telling you, right? And by the way, give me more likes and give me donations and buy my stuff while you're at it, right? Thanks. Okay. Anyway, my fake guru rant. All right, let me see what else we got here. So I hope that answers your question. What else we got? Hey, Schwartz, good to see you from Romania. Thanks for stopping by. My Romanian crew there. Usually he's on TradingView too. Yeah, Schwartz, I'm not on TradingView today. Hey, can you check ADA BTC? Okay, but just want to look at support and resistance levels. All right, Romana. Yeah, so Romana knows that I'm not a big fan of cross pairs because they're kind of pointless. But because one needs to move faster than the other. They're no different than Forex cross pairs. Now, so as far as support and resistance, clearly you have a support right there, okay? And you're sitting on it right now, pretty much. As far as resistance goes, you're looking at, let's see, you have some right here, and then you have, looks like you have one up around here somewhere, right? Those are your levels. So you're sitting on a support now, but they're not very meaningful. They look great after the fact, but they're not very meaningful if their parent markets do something different, right? So here ADA against Bitcoin, if ADA for some reason moves faster, or if Bitcoin moves higher, faster than ADA, then this thing actually should go lower. okay? Just like if the pound goes faster than the yen, or the yen moves faster than the pound, on the pound yen, the pair goes lower, even though they may be moving in the same direction, right? Each individual currency. So that's, I know that could be confusing, but anyway, those are the levels. I hope that answers your question. If this was not a cross pair chart, I wouldn't be opposed to the general structure. I mean, you have a nice consolidation, nice potential high or low consolidation, and you're near the supports of it. So I mean, if I look at it just purely objectively and not know that it's a cross pair, at least you have that going for you there. Okay, so thanks for asking. Let's tell what else we got here. HVBT as a swing. Okay, who? All right, I'm sure a lot of people get a load of that name. All right, HVBT. It's a stock, I guess, as a swing trade. Oh, one of these. So it's like a blockchain stock. No way. Swing trade long? No way. No way. If this is it. And the reason why I keep saying no way, look where you are. Double top pin bar. If anything, that's a short. If anything. I wouldn't short this because it's blockchain, meaning so just like we wouldn't short Bitcoin, there's no point in shorting something that follows Bitcoin. But this right here, bearish pin bar, failed high. Basically, this is double top, failed high, same thing. No way. Not at these prices. I'd look for a pullback. I'd look for pullback maybe into this area here, something like that. And perhaps you get a buying opportunity somewhere around there. That would be more sensible for a swing trade. Not here. No way. So thank you for asking about that one, especially with that candle. All right, Juan. Hey, from Dubai. Welcome, Juan. Chris, RH, Dan Loeb said his firm just placed a position. Oh, you cannot go buy funds. Any, like an institutional investor or trader, here's why. I mean, you're asking, are any funds honest? I'm sure they mean well personally, but why would they put themselves in a position that's less advantageous, right? They're like, oh yeah, right, we just placed the position, right? Great. Yeah, now they probably are getting out of something, right? Or why would they want people to front run them, and now they have to, buy things at better prices? Or why would they tell people after the fact so that they can get out when you buy it? Like, that just doesn't make sense. Never, ever, ever, ever go by institutional authorities that, I run a fund and I'm going to tell you to do this and blah, blah, blah. There was a Robinhood Investors Conference not too long ago, and there was one of those guys on there telling people to buy oil, okay? And you see where oil is? And someone came out in our chat room and asked, oh, should we do something on oil? And when I saw that it was from the Robinhood Investors Conference, do you think for one moment that this guy is trying to help Robinhood investors, telling them to invest in oil? He was dumping his position on them. Never, ever, 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 ever trust those people. They're not there to do you any favors. They're not there, and it doesn't matter if they're wrong. It doesn't matter. It doesn't. Well, it's the market. I don't have to tell you. I mean, I'm not perfect. Right. Thanks for dumping it on me, man. So anyway, yeah. I hope that answers your question. I get very passionate about that. Don't get me started on those institutional people that love to share useful information with the public, because they care about our well-being and stuff like that. All right, Senk from Vienna. Senk, thank you for joining. Greetings from Istanbul. Hey, I visited Istanbul once. I was there one time. Seriously, it was a nice city. Yeah. Okay, I know you are a swing trader, but do you expect Bitcoin to revisit mid to low 30K area, or will it stay above 40K? Well, so that's a good question. I don't know. I have no idea, no opinion. It might. Its thing is that 30K area is still an active support. So the way to look at it is, if it gets there, then there may be something to do. Okay, but that's the only way you can look at it. There's no way to predict, oh yeah, there's a 95% chance that it's going to pull back to 30K. There's no way to know. Now, based on the structure that we see right now, I would say it's a low probability. I would say 35K, you have a much better chance, touching 35K than 30K. But anything is possible, right? Just like gold, anything is possible. No one was calling for this pullback on gold to 1670, whatever, that we had earlier today. So anything is possible. right? Just look at it that way. Don't go by predictions and don't try to predict where this thing is going to be anytime soon. Just go by the current levels where it's at, look at the most recent support and resistance, and wait for, since we have a bullish structure, then it makes sense to be looking at supports, right? Why would we short resistance in the face of a bullish structure? Although there are going to be a lot of bears that come out and say, oh yeah, okay, this thing is the top, it's going to pull back. You're always going to see that. This is a bullish structure. You don't short bullish structures. How many people were calling for shorts? I wonder. How many people were calling for shorts on this candle right here? All right, and why would shorts come out on that candle? I'm going to make that real big so people can see it. This candle right here, right? Why would people call for shorts on this candle? It's a green candle. Well, this candle wasn't always green. At one point in the day, this candle was fully red. Okay, it was a fully red candle, and it was taking out, it was engulfing the previous candle. I'm sure you had all these fake guru bears all over the place. Oh, Bitcoins are short. I'm short. This thing's going back to 30K. It's going to go to 20K. I'm sure you had tons of that talk. And next thing you know, here we are. Okay, so people always ask me, how come you don't short Bitcoin? How come? How come you don't short it? Well, because Bitcoin generally is strong. Well, that's not the reason, but you know, anyway, we don't short Bitcoin and we don't run into those problems. Anyway, so thanks for asking. The scammer, do you use leverage? It's funny you mentioned that, the scammer, because I just mentioned we don't short Bitcoin. The reason is we don't use leverage in Bitcoin or any of these altcoins. We don't play that leverage game. There's no regulation. There's too many games that they can play. There's too much of that stuff going on. We'd rather be one-to-one. It's safer, or we're just more conservative in that sense. Leverage can get you into trouble. Leverage is more appropriate for one if you have experience. If you don't have experience, you really shouldn't be using leverage. Number two, it's better for short-term oriented trades, you know, like day trades, because that's where it makes the most sense. Why? Because your stops should be very tight and you shouldn't be exposed to broad moves going the wrong way. Leverage, you get wiped out in 2 seconds in Bitcoin, right? People make this mistake all the time. But that's where it's most appropriate. And most people, if you've been doing this less than a year, you should not be looking at day trades, especially in Bitcoin, where leverage is really most appropriate. So, but you know, people aren't going to listen to me when I say that. They just want to make, you know, the money that a day trader and blah blah blah. No one's going to make. It's very, very hard to make money unless you have a lot of experience. Okay, so if you don't, it's not something you're going to learn, you know, in a flip of a switch, or you buy some training program and they're going to teach you in, you know, you're going to watch some videos, and after you watch these videos, you're going to be a pro now. No, that's just a dream that they sell. Okay, and I can tell you that firsthand. All right, let me see what else. So good questions, the scammer. Hey, Paul, greetings from Denmark. Hey, welcome, Paul. Bart, Rune, if you have, okay, so let me see what else. Let me just run through these questions. That's weird. I have a lot more information. Oh, you know what? Okay, Bart. Well, maybe that chart is more has more information on a different exchange. Maybe it's the exchange I looked at. All right. How many altcoins are there? And my rumors about. Okay. All right. So just to answer those quick questions before I just finish up here, I'm going to finish up on Rune. But there are thousands of altcoins. I don't even know how many there are. There are thousands of them. So the reality is most of these altcoins, most of them offer no true value. People are just speculating on them. They're like lottery tickets. They're like penny stocks. That's how you must treat them. They all come out with this amazing story and this amazing technology, and they solve problems that don't need to be solved. Right? That's pretty much the story with most of them. So most of them are basically going to go nowhere and eventually just become delisted and all that stuff, like the NASDAQ stocks of many years ago that no one even knows about anymore. Okay? All the dot-coms, sure, they're going to do this and they're going to do that, they're going to do this, and they produced nothing. Okay? But the potential was there. Anyway, so let's go over Rune, and then I'm going to wrap this up. Again, I appreciate everyone's questions, and thank you guys for sticking it out. I know this is a long stream, and I know I'm not on TradingView today, but I'll get that fixed. So here's Rune. Now, again, I'm not surprised to see this looking similar to that Bitcoin situation. They all look the same, these altcoins, right? This coincides with 30K. This coincides with the bounce off of 30K. And now here we are, you know, trying to do something here, right? And great opportunity for fake gurus and all kinds of all the Bitcoin people on YouTube to start with their their rants and their nonsense, which lures a lot of people. And that's why you get a lot of this confusing price action. So here's the thing, on something like this, it pushed this resistance, all right? But keep in mind, this is not very meaningful if it's following Bitcoin. So just like those other coins we looked at, you have this attempt at a continuation pattern. Where do you define risk from something like this? I'd go back to this little blip over here, which is what? What is this price? $5.77. So you can round that to like $5.50. That's where you're defining risk from. So this thing right now is at $7, a little over $7. You're looking at a dollar and a half risk. You need to make $1.50 to justify that risk, right? And again, just like all the other coins, you have this resistance zone ahead of you, which most likely coincides with around 50K on Bitcoin. The question is that the market needs to answer. Do you get the next leg higher? If you do, you get your reward risk payoff, okay? If you don't, you get stopped out and you take the loss. Don't make the mistake of hope mode and be like, yeah, it'll come back. It always comes back, and this thing goes back to the support and breaks the support. Because at that point, you're, I should have waited. Now look where it is. Okay, so we can't predict these things. All we know is it's following Bitcoin. Bitcoin needs to make the choice. It needs to answer the question. Does it follow through? And we're seeing Bitcoin 51K or something. Then then your party continues. If it doesn't follow through, then your party is over. Okay, and you just take the loss. That's it on something like this. So it really comes back to, and I'm going to leave you with this before I wrap this up. This game comes back to one thing, and that's risk. We can sit here and look at charts all day. A lot of people out there, I see a lot of talk. I watch a lot of videos on training videos and stuff like that just to see what people are teaching. And all they're doing is teaching the same wrong information that will lead you to continue to do the wrong things. And what I mean by wrong information is they convey this idea that all you need to do is look at this chart pattern and look at this moving average and look at this oscillator, and 85% of the time it will work. I mean, that's the stuff I'm watching. The reality is all of that is random. There's no 85% nonsense. They said, well, how do you get the 85%? Well, I went back over 100 trades on the chart here, and I back tested it, and 85 of them were green. That's not an accurate back test. All right, you need to back test thousands of trades in randomly generated price action, not going backward to a market that is a certain way. Okay, professionals know this, but these amateurs don't know this, and they think, oh yeah, I've done a back test, and it looks academic, it looks like it makes sense, it looks smart, and if you don't know any better, you think, okay, well that's right. It's not right. The reality is, this is all random. So it doesn't matter really. A lot of the stuff that we look in the chart is really to serve one purpose. It's not to predict where the market's going to go. That's what everyone thinks. And that's what a lot of these fakes tell you. Well, I'm going to predict this. It's going to go here. Oh, it's probably going to go there. We're looking for levels where it might go. But more importantly, we're looking at, what do I have to risk to play this game? What do I have to risk? And once I define that, which the chart can help me do in a plausible and accurate way, risk. Okay, here, a couple of dollars, over here, $5, whatever it is. Now, once you know that, then you decide, am I willing to take that risk, and how much money am I willing to put on the table, right? When you decide your sizing. And really, it should only be 1%, 1 or 2%. That's really what it should be. But when you have a $1,000 account, people get frustrated when you win, right? So you risk 1%, you make 2%, and you're like, well, $20, that sucks. I risked $10 to make $20. I can't do anything with that. Of course you can't. But that's the proportion of the account you're working with. And that's the healthy amount of risk that allows you to play the game over the long term. So the problem really is not the risk, it's the amount of money that you're working with, right? So, I'm going to turn my $1,000 account into $50,000. Well, how do I do that? You can't do that realistically. It's possible if you take ridiculous amount of risk, but during that process of, risking 50% of your account and then trying to compound the account every trade you take, right? You either win 50% or you lose 50% or whatever that game that play, you're going to have losing trades. And because the risk is so high and the system is random, that if you have 2 or 3 or 4 or 5 losing trades in a row, which is very possible, you wipe out the account. Okay? So that's the reality that these guys don't really talk much about, because it doesn't serve their purpose. You're not going to buy their products if they tell you this is highly random and chances are you're not going to make money. No one wants to hear that. All right, so again, my purpose here is to make you aware of the risk. Focus on the risk. That's the best thing you can do. Forget everything else. Forget what people say. Forget the news. Forget grasping for control. The only control we have is risk. The outcome of the market, right? Whether it's positive or negative, meaning you made money or you lost money, that is not really in our control. All we can control is the amount that we lose. Okay, so if the market works out and it happens to be a win, the market gave you a gift. Okay, and it was a random gift. You should be happy with that. As long as that gift is greater than what you had at risk, you've done your job. You've won. Okay, and that's the goal, is to basically do that over and over again. All right, so I'm going to leave you with that. I hope you found that helpful. Let's go back to just Bitcoin here so I close out the video. So again, like I said, don't get wrapped up in all that other stuff, and we'll go from there. You could check out the links in the descriptive portion of the video here. I have some links to our website and all that stuff if you want to check that out. If not, that's cool too, no problem. I want to thank you all for spending some time with me here today. I hope you liked the video. I don't see a lot of likes. 12 is okay, but I had a lot more than 12 people in here. Again, you don't have to press it if you don't want to. But anyway, I guess it helps the video somewhat. I want to thank you all, wherever you are in the world, for spending some time with me here today. And again, join me. Usually on Wednesday we do the Talking Market show, and on Thursday I'll stream again. And we'll go from there, okay? So, like I said, focus on price, focus on levels, and focus on risk. Thank you very much for watching.